Hi, everyone. My name is Victor. Welcome to Real Talk, FGA's answer to BBC's Hard Talk. We apologize for the delay. We are a bit late. We had some technical issues, but then again, this is the new normal, right? We are now communicating via a live talk, which, you have to start dealing with some of these issues. But we are here now, and we are so glad that you're able to join us for this very short time of maybe 45 minutes, where we can really get to know some of the issues that we want answered. And last week, there was a live talk on Mother's Day where we had three lovely moms come and talk about the ups and downs of parenting. Today, we're going to be talking about the ups and downs of the financial world here in Malaysia. And it's something that I'm sure resonates with a lot of us during this time of a shutdown. To help us to answer some of these very difficult questions and to give us solutions to some of the things that we are experiencing as Malaysians, I have with me a very special guest. His name is Jason Chong. He is the CEO of Manulife Investment Management, but more intimately, he is a member of FGA. He attends the Havila Home Fellowship. So, wherever you are, let's put our hands together and welcome Jason Chong. Hi, Jason.
Hi, thank you for welcoming me today.
It's so good to have you join us today on this Sunday afternoon. What do you normally do during this time of the day?
Oh, 3 o'clock is siesta time.
So then, a very special thank you for taking time off from your siesta and coming to answer some really serious questions that some of our viewers have. We look at the wall behind you. You look like you have a very, very striking, strong, bold statement to make with a wall like that. Where are you? Are you at home in the living room right now?
I'm in my dining room.
Your dining room.
A feature wall, and that's a feature wall we have on one of our walls. Yeah.
Okay, I wish I had a wall like that. You have to put up with something like this right now. I'm in my study. You can see books in the background, So we are both at home, and this is truly a unique situation in time for all of us, where we are actually communicating with one another on a Sunday via webcam. And but it's great. It's a wonderful tool to have, and so we want to just say thank God for this technology that we're able to use during this time. I just want to do a small shout out for you. I understand that Manulife just recently won the what's it called? The Refinitiv Lipper Award. Am I correct? That's a mouthful.
Yes, it is. Yeah, it's an annual award that Lipper comes up with, and I'm proud to say, for the last 10 years, we have consistently won at least one award.
That's fantastic, and we're so privileged to be able to have someone like you, not only as an FGA member, but here with us today on our live talk to be able to answer these questions. So I'm going to get straight to it. Little bit of background. We all know, we read it every day, that the situation isn't very good. We are looking at a potential recession. I just want to quote you. You say in a publication I think it's The Edge, recently you said that over the next few months, it will be difficult to discern where the market is headed because of the COVID-19 pandemic. And we also have the oil price situation still evolving. And notwithstanding the actions of governments and central banks, or the trajectory of the pandemic, the risk of a global recession is indeed rising. So can you tell us how bad is the situation really? And more importantly, will it get worse?
Yeah, so sorry to have to start off on a bad note, but the bad news is that things are likely going to get worse before it gets better. But the good news is a global recession is not something new. There is a light at the end of this tunnel. If you look over the past couple of decades, we have seen a global crisis roughly once every 10 years. And so you can say that this is the normal trend that you see, although each of the crises that we've been through in the past have been very different. But when you look at how markets have performed and how economies have performed, you can roughly draw a trend that we see 5 to 7 years of economic expansion, and roughly 2 2 to 3 years of a recession. So we saw a peak in the markets roughly in January this year. And unfortunately, that was also the onset of the COVID-19 pandemic. And subsequent to that, the market has come down. I think that we are about to enter into a recession. If you look at our latest GDP growth for first quarter, it came in at a positive 0.7%. But that is expected to hit a negative number going into the second quarter of this year. But what is interesting is that when you look back at markets over the last couple of decades, what you find is that when during bull markets and the market goes up, every high is a higher high. And when you look at the bear markets and the market crashing, every low is also a higher low. So what that means is that if you plot the chart of the KLCI or the Dow Jones, you can actually see that overall there is an upward trend in financial markets over the last 30 to 40 years. Next slide, please. So I talked about the broad market in general. I would now like to talk a bit about how things are happening as far as Malaysia is concerned. So unfortunately, Malaysia is likely to be hit by a triple whammy, which is, apart from the COVID-19, which is a global pandemic, we also had to deal with weaker crude oil prices and palm oil prices. As you know, Malaysia is an exporter of both of these commodities. And we get our government finances from the exports of these as well. So the fact that prices have come down a lot, especially for oil prices, it would have an impact on our government revenue. The third whammy is to do with the recent change in government. And foreign investors don't like uncertainties. And on the back of the three blows that we've been hit with, on the first quarter of this year, we've seen a net foreign outflow of about 26 billion ringgit.
So you can see that it doesn't look good. But the question, I suppose, that follows up with that is that how long will this last? I mean, you mentioned that we see a global recession on average about once every 10 years. But this is unlike other types of recession from the past. It's not driven by overinflated asset pricing or overspending, but more to do with the fact that demand just literally just kind of stopped because everybody had to stay home. So will we see this drag on for very, very long, or is this something that is cyclical? Is something that it's maybe only for the next 6 months to a year?
Yeah, that's a very good question. Like you rightly said, the difference between this crisis and others is that because of the COVID-19 virus, the governments throughout the world have decided to go into a lockdown, which is effectively like turning off the water tap. And because you turned off the water tap and the taps are dry, you would expect economic growth to collapse overnight. So in the first quarter of this year, we only saw roughly 2 weeks of that shutdown. And in the second quarter, like for the whole month of April, where the economy was shut down, you will see a higher impact of that. But the good news is that, like a tap, the government is now starting to reopen the tap. So water will start flowing again. And with that, we hope that the economic momentum will pick up faster than what you normally see in a recessionary period. So in a normal recessionary period, like I said, it takes 2 to 3 years for that recovery. We hope that this time around would be faster.
That would be good. That would be good. And in line with what the government is doing and around the world, the Malaysian government has recently pumped in about 250 billion ringgit, or they are going to be pumping in that amount of money over the period of the next few weeks, months, and probably towards the end of the year Next question to you is that enough?
Yeah. Next slide, please. So if you look at Malaysia, I mean, we are a developing country. And to be honest, we are not as rich as some of our neighboring countries like Singapore. So to say whether it is enough, I would say no, because I mean, when you analyze the financial package, there are certain segments of the market or people that have not benefited from some of the handouts, so to say. So if you look at the chart in front of you, out of the 260 billion of stimulus package, the actual cash handout is roughly about 20 billion ringgit. And this is what is actually most important, because it is this initial period where people are locked down, or as we come out of a lockdown, people will lose jobs. You need that cash inflow to help them get back on their feet. And I think that the government has done the right move in coming out with these packages that you see. So if you look at that 24 odd billion of cash hands out, that is roughly about 9% of the total of 260 billion package. Point number one. Point number two is that if you look at it as a percentage of the budget deficit, or how much this would cost us as taxpayers and citizens, is that last year we had a budget deficit of roughly 3%. This year, because of the handout, that number will actually come closer to 5%.
But I think it's made especially difficult for the government, given that oil prices right now hovers around the 20 to 25 US dollar mark. And we have been projecting a oil price of about 60 US dollars. So that would put the government in a very difficult position to raise funds to be able to sustain any prolonged recession. Am I correct in saying that?
Yeah, you are right that the lower oil prices is actually very damaging for the Malaysian for the Malaysian government, because it makes it harder to finance the deficit. But that said, I mean, to be fair, central banks or governments throughout the country are doing similar initiatives in terms of giving out handouts to the poor and the needy. So I would say that generally, if you look across the world, that everyone would face a higher budget deficit for this year.
Coming closer to home, something that I think all of us are thinking about uppermost in our minds. My next question for you is, given what you have just shared, right? How should we as Malaysians prepare for the future?
Wow, okay. This is a difficult question.
Oh, that's why you're here. To answer the difficult questions. This is real talk.
Okay. So let me start by saying that, okay, so I started off my career as an investment analyst. And I think by nature, I'm a bit more conservative. So, when I analyze companies, I always look at the downside risk of investing in these companies. And I would say I would use that same principle, and first of all ask if the economy is going to get worse before it gets better. Okay, what can we do to basically mitigate that, or be prepared for it? I think to say that we can mitigate it is actually not true. Is whether we are prepared, or how prepared can we get ourselves that we can ride through and survive this phase of the economic cycle. So as an employee, planning for the worst means what happens if I lose my job, right? You need to have enough savings to that, and that includes, to finance your expenses, including loans, for at least the same number of months as you think you will need to find a new job if you are unfortunately retrenched. So that, to me, for an individual, is how to gauge how ready you are. If you are an entrepreneur and running your own business, then it's how long you can keep your company going to ride through this downturn. It's cash flow planning, it's minimizing your expenses, maybe even refinancing your loans or downsizing. For both groups of these people, I believe it's the same process. You need to come out with a plan to help you crystallize the issues ahead of you and to force you to start thinking through the solutions. Seek help from friends who have gone through similar situations. Although you may not have all the answers today, but at least you are on the right track to understand where you're heading and what you need to do.
Yeah, those are sound advice. But I know that people who are now working from home and also those who are still going to the office, having to adjust to this new reality. And I suppose everyone is really trying their very best to make the best of the situation. But it's probably not easy to navigate as creatures of habit. We find it very hard to make these changes. How would you advise people when it comes to dealing with some of the emotional and mental issues that comes with trying to manage their finances and basically their lifestyle during this time?
Yeah, I think you raised a very important point and a very valid point. Like for us, we are now at a stage in terms of my company or our company, we are working 50-50. Half the office is working at home, the other half is working in the office, and we rotate once a week. And the whole purpose is to get people ready to come back to work in the office. But like you rightly said, there's a lot of apprehension because of the fear of potentially catching the virus, as you travel to the office or when for mixing around with more people. And then on the other hand, you've got to deal with the stress of if you have unfortunately lost your job or your business is down and you need to find solutions. One can very easily be depressed and possibly go into depression. I think the key is to be in the right frame of mind, right? If you were to quote, if you look at Philippians chapter 4, verse 6 and 7, do not be anxious about anything, but in every situation, by prayer and petition, with thanksgiving, present your request to God. And the peace of God, which transcends all understanding, will guard your hearts and your minds in Christ Jesus. And I think it's very important to remember this because of the situation that we are currently going through. And we need to trust in the Lord to guide us through. But I mean, if you talk about stress, I think the common issue, even in the daily working life, is that people feel stress, when they are got many things to do. And I think one simple tip I give is that you have to differentiate stress from hard work or having many things to deliver. To me, stress is when you do not have a solution to a problem. And because of that, you worry about it. You have many sleepless nights. That is worrying because stress kills. And that's where I think, you really have to trust in the Lord to show you the light. But on the other hand, as we work and, especially now that we are coming back from COVID-19, the office is getting more busy. There'll be many projects or something that work that you have to deliver. To me, that is not stressful. It is hard work. You got to put in longer hours, but you do not have to worry about your rice bowl, your next rice bowl. You just have to manage your time properly so that you can deliver what is required. So I think it's important to basically to differentiate between what is really stress, because then that puts you in the right frame of mind.
Thank you for that. For those of you who have just joined us, we are talking to Jason Chong, CEO of Investment Management and a member of FGA. I just want to give you some, what do you call it, a chance for you to ask questions later on. So if you are on Facebook right now and there are some questions that you want Jason to answer, then please write it in the message box down there, and we will look at your questions later and give him a chance to answer your questions at the end of this. Okay, my next question to you is got to do with recovery. We've heard various theories about the different types of recoveries that could possibly happen when things start to improve. And, we had a mishmash of different alphabets presented to us. And for many of us, it's like looking at alphabets for the first time in a long time, right? So we have the V recovery. We've got the U-shaped recovery. Or at the worst end of the spectrum, we've got the L-shaped recovery. So perhaps maybe you would like to just explain briefly what these three different recoveries are and what your own view is on our recovery.
Okay, next slide, please. So I thought it would be easier to answer your question through a slide. Picture tells 1,000 words.
Okay, that looks like
yes. So let me just explain this chart. The chart basically represents quarterly GDP growth numbers of Malaysia. The blue lines that you see, the blue solid line you see, are the actual quarterly GDP up to first quarter of this year. So that just came out a couple of days ago at 0.7%. Then you see the red dotted lines, and that is what I call our baseline, or my baseline expectations of what recovery looks like. So if I were to explain, because in the second quarter, we have gone through a longer period of the lockdown, you would expect second quarter GDP to go into the negative territory. From the reports I have read, that second quarter number have ranged anywhere from 3 to 7%. Okay. For the purpose of illustration, I've penned it down as 4%. And as the economy slowly recovers, you can see that that red line gradually increases, right? As they slowly open up the different sectors of the economy, and people become more confident of coming out and shopping again and eating in the restaurant. And hopefully by fourth quarter this year into first quarter next year, things will start getting back to normal. So that's currently my base case assumption. However, I mean, I'm sure when you listen to CNN or even our own local news, and the Director General of Health talks about concerns of a second wave. And this is truly a big concern. And we don't really know, and we hope that there isn't a second wave. But if we do see a second wave, it will most probably happen in the fourth quarter of this year. So why fourth quarter? It's interesting because, when you talk about this global pandemic, the last time that this happened was more than 100 years ago. And it was called a global pandemic. It was called the Spanish flu. And if you read back at all the history books and how the virus spread and all that stuff, the virus spread across the world in 3 phases, right? And where the government is coming from today is that, or when you look at the 3 phases, it is the second wave that it was the most deadly. And the governments around the world are concerned that we may see a second wave, as people don't adhere to social distancing and all the the MOC guidelines, and this time around, the spread of the virus could be worse. So we don't know whether that's going to happen. But if indeed that will happen, possibly it will happen in third, fourth quarter of this year. That's why if you look at the green line, the green dotted line on the chart in front of you, you can see that I've plotted in a lower fourth quarter number. Again, that's assuming that there is a second wave, and the second wave is worse than the first wave. And because of a second wave, you would expect that recovery pattern that we see will take longer, because people will be more cautious going forward. So, Victor, like you said, it is a bit of an alphabet soup game. The base case recovery, to me, I think looks a bit more like the Nike swoosh. The worst case scenario, or the W-shaped recovery, is not something I hope will happen.
Oh, you just added two more symbols to this already complicated alphabet soup. But I like your Nike swoosh. I'm a fan of Nike, so we hope that what you predict comes true, and really hope that we do not have a second wave. Because you mentioned going back to restaurants and meeting and gathering, going back to church. That is such something to look forward to, and we really hope that Malaysians all over will really adhere to the MCO and the social distancing, so that we can get out of this situation and really get back to our lives again. Okay, my final question for you before I start taking questions from our audience is, for those who have resources, and we all do, whether it's small or big, we all have resources. Where are the opportunities to look for during this time?
Oh, okay.
I've left the best for last. Okay.
Next slide, please. Okay, so what I've done here is that in the table in front of you, we have looked at previous what we call boom-bust cycles. And if you can't read the screen, the first is the Asian financial crisis. Then we had the dot-com bubble, and then followed by the global financial crisis. And lastly, this current COVID-19 pandemic. And you can see in the third column, if you look at the first three crises, the time it has taken the market from the very top, from the peak of the market to the bottom of the market, range anywhere from 10 months to 18 months. In this COVID pandemic, it took 2.5 months only. Right? And if you look at how much the market retraced from top to bottom, it has ranged anywhere from 45% to 79%. And thereafter, from the bottom of the market, and you look 12 months out, markets have rebounded anywhere from 50 to 180%. So I wanted to share this so that you get a sense of how markets have performed in previous boom-bust cycles. Now, if you look at this, from the low sometime in March, the market has rebounded, and year to date up to the 11th of May, the market is down it has rebounded by about 13%. So my biggest concern is that when we look at the market going forward, it appears that the market has discounted, or is expecting somewhat of a V-shaped recovery, that by the end of this year, things should return back to normal, and that it'll be back to the good old days come 2021. I'm not so sure about that, especially if we do see a W-shaped recovery. If you look at valuations, I would say that in the past crisis, because the sell down has been very sharp, you can say that there are more stocks that you can bottom fish, or you can say that it's a bit like a mega sale, right? This time around, we don't see that mega sale. Prices have come down, but it's not at the level that I would say is a screaming buy, right? But that said, I think it's difficult to make broad brushes. If you were to examine closer, there are some stocks that are very cheap and that have got good values in it. I would advise, I've been advising our clients that no one knows where the market is going to go. So the best way to invest is to do dollar cost averaging. So dollar cost averaging is that, okay, I think that this crisis would last for at least another 4 to 6 months, before it bottoms and go up. So if I am going to invest, let's say 20,000 I got 20,000 to invest. I won't put the entire 20,000 into the market today. I would invest maybe 5,000 every 2 months, right? Consistently. So by doing that, you are either averaging down your cost or you're averaging up your cost, right? Rather than investing all your money at one point and you find that the market goes to a lower level. So I think that would be a safer approach to investing. To answer your question on where what the beneficiaries are, I think one of the positives coming out from this pandemic is the new norm and how we as human beings have adapted to keeping ourselves occupied throughout this lockdown, still able to eat our favorite food, okay, by calling Grab, right? For me, I'm on my computer most of the time. We can't meet physically. We have conference calls, webinars, similar to what we are doing today. And this is the new norm. And in line with this new norm, I mean, there are also beneficiaries like telcos, tech companies. Although Malaysia is not at the forefront of technology, we still make a lot of major components that goes into your handphones, that goes into your PC and your various electronic devices. So we are beneficiaries in an indirect way. Also, as part of that theme, we talk about logistics, warehouses. As you shop online, what does that mean? You still need a physical warehouse somewhere to store the goods, to pick it up, and to deliver the dress that my daughter just bought, to the doorstep. So these are logistic chains that there are companies that have exposure to that we can benefit from. Right? The other area, of course, is the healthcare industry. With COVID, you would expect that demand for rubber gloves. We are the world largest manufacturer of rubber gloves. Demand has gone up. They are raising prices, so you would expect these companies to show stronger earnings. Healthcare is very resilient, although because of COVID-19, a lot of people don't visit private hospitals because of concerns. But healthcare is economic recession-proof to a certain extent. If you are sick, and you have to visit the hospital, right? So we think that demand will return if you look at the healthcare industry. Then there is, of course, the manufacturing and export sector. Like I mentioned earlier, we talk about manufacturing companies that supply components to fit to other products. And last but not least is the defensive, or what I call the bomb-up stocks. These are the ones that, like I said, it's not a mega sale yet, but there are some values starting to emerge. And that's more from a bottom-up perspective in terms of, I can't draw broad trends. It's more of looking at individual stocks and see how much they have retraced.
Thank you for that for those tips that you just gave. Very much driven by the structural changes that the economy is going to be facing, the adoption of new technology, and yeah, really changes in the supply side of our economy, using technology and logistical changes to drive supply. Um, Now we're going to take questions from some of our viewers. The first question I have here is from John Yee. He's asking the question, what is your opinion in investing via robo-advisors versus human managed fund managers in these times?
Okay, so robo-advisory mainly because they're trying to lower the cost of investments. They normally invest in through ETFs, exchange traded fund, which is effectively buying into a basket of stocks. So when you buy at this point in time, uh, you're not looking for values. You're just playing the overall market trend. So I would say that in situations like this, I would think that you could potentially make more money from investing in a fund that is actively managed as opposed going through ETFs,
Hmm.
right? It's like, so if you look at our KL composite index, there is 30 stocks in that in the KLCI. You can today buy the KLCI ETF, right? So if the market goes up by 10%, you will get a 10% return. But if you choose the right stocks within the KLCI, right, that particular stock can go up by 20, 30%, right? So it depends on how active you are. Uh, you have to basically look at active fund managers and invest through unit trust to benefit from that.
Okay. Second question comes from Xiao Ching. She wants to know, where do you see opportunities in the market for long-term investments? And she has a follow-up question. Do you have any view on the ringgit?
So yeah, so I think the where I see long-term potential are those sectors that we talked about, because a lot of them are like, if you talk about the beneficiaries of the new norm, etc. It's a long-term trend. It's the way of life. Is we're talking about the fourth industrial revolution. So in line with that, this theme of digitalization and looking for beneficiaries will always be there. If you talk about investing for the long term and looking for deep values, look more at the bigger cap stocks. They have gone through previous ups and downs, and they have survived. They could be underperforming right now because they're like, let's say for example Genting's, although I know it's a sin stock, but it has basically been around for many years. And because of COVID-19, of course, no one is going to go up to Genting Highlands. But once the economy recovers and confidence comes back, people will start filling up the theme parks again. So that is basically a long-term trend that, if the share price has been bashed down a lot, I'm not saying to buy Genting, yeah, but I'm just showing you as an example of the stocks that you could look at that has been bashed down currently, but that in the longer term it will survive and it will come back sooner or later.
So look
So
for
what was the
stocks.
second part of the question again?
Second part is your view on the ringgit.
Oh, okay. So ringgit has weakened a lot, and when you look at currencies at this point in time, it is about the flight to safety. So I mentioned earlier that Malaysia has seen an outflow of roughly 26 billion ringgit over the first quarter of this year. And it is because of that outflow of funds that you see the ringgit weakening from about the 410 level to the 430 level. I think that the ringgit will hover around this level until the fear factor diminishes. So what that means is that people will be concerned or be reluctant to invest. I'm talking about foreign investors. that they will be reluctant to invest offshore or outside of US dollars until they are comfortable that the global economy is on a stronger footing. And Malaysia, for example, economic growth is starting to pick up again with a sustained momentum. So until then, I think the ringgit will hover around the current levels.
Okay. We'll just take two more questions given the limitation of time. The next question comes from Kay Yin. Any thoughts on what would be an appropriate investment portfolio, equity versus non-equity, so maybe fixed income, during this time?
Okay, so it depends on your risk appetite. Under normal, if you're a balanced risk person, you're not willing to take too much risk. I would say that under normal circumstances, you should be about 50-50. To me, right now, I will not. I would think that we should be closer to 60% equity. Not today, but if the market, like I say, comes down a bit more, if indeed things start to turn a bit uglier on the economic front and the market comes down, then I would say look to come in a bit more on the equity side. But for now, I would say it's 50-50 or 40-60 to be a bit more on the conservative side at this point in time. 60 in fixed income in the short term because of the uncertainties we're seeing in the markets. But when markets come down, or if there's another sell down, depending on the level, and we start to see more of a mega sale, then I would look to increase my equity allocation.
Okay. Our last question comes from Sarah Yong. She wants to know, is it wise to take up the loan deferment offered by banks at this point?
So the loan deferment, if I read it correctly, is deferring your loan repayment for 6 months. And I think the finance minister said that they do not have to, they do not suffer any penalty payment, right? So they won't charge you extra for not paying your loan. It's a straight deferment. And if it doesn't come with any strings attached, I think you should, because it gives you a bit more cash flow in the short term, as long as it's clear that you are not paying anything extra.
Okay, so so the answer is yes,
but you got to read the fine lines. But if you're dealing with banks, you got to read the fine lines. Make sure you read all the terms and conditions.
Okay, noted. So yeah, I hope that answers your questions. Those of you who asked. For those of you who have not had an opportunity to ask your questions, we do apologize, given that we do have a strict timeline here. And so, but thank you very much for your time, Jason. As I mentioned before, we are so privileged to have the head honcho of a large investment firm be able to spend this 45 minutes with us. We are really appreciative of your time. For those of you at home who have been watching and listening, we hope you've been blessed. We have this live talk once every week on Sunday at 4 p.m. So we hope that next Sunday you will be able to join us. And next week we'll be talking about worship. The topic is worship when the music fades. Now, it's not just open only to musicians and worship leaders. It's broader than that. It's really about worship as a way of life. So we would encourage you to come and listen at 4 p.m. next Sunday. And please do invite your friends and share it with those you know. In the meantime, on behalf of Jason, myself, and the crew here in FGA Live Real Talk, want to thank you for your time. We wish you a safe lockdown wherever you go. Remember to keep social distancing. And until we meet again next week, God bless you all. Thank you.
Yeah, God bless. Bye.
Bye.